Hi students, welcome to the video on ratio analysis. In this ratio, we will discuss the activity or efficiency ratios. So in the previous video, we have already discussed the activity ratio. That means we have calculated receivable turnover ratio, average collection period ratio, then inventory turnover ratio, then average repayment period or creditor velocity ratio, and payables or creditors velocity ratio. In this video, we will discuss the working capital turnover ratio. So, activity or efficiency ratio are financial analysis tools which are used to measure a business ability to convert its assets into cash. These ratios are also known as turnover ratio because they indicate the rapidity with which resources are available to the firm or company to produce revenue from operations. So, working capital turnover ratio is directly related to sales. Sales means that is revenue from operation. The current assets like debtors, bills receivable, inventory or stock, cash, it changes with the increase or decrease in sales. So, important for non-manufacturing concern. That means this ratio, working capital turnover ratio, is very important for non-manufacturing concerns where current assets play major role in generating sales. It indicates the efficient use of working capital. You know, working capital is excess of current assets over current liabilities. If we think of gross working capital, only we consider current asset. In net working capital, we will calculate by deducting the current liability from current assets. So, working capital turnover measures how effectively a business is at generating sales for every rupee of working capital put to use. A higher working capital ratio indicates that a company is able to generate a large amount of sales. A too high ratio suggests that a company needs to raise additional capital to support future growth. So we can solve this working capital turnover ratio by means of the following example. Find out working capital turnover ratio of ABC Limited. It is given cash 10 lakh, bills receivable 5 lakhs, sundry debtors 25 lakh, stock 20 lakh. So total current asset is 10 plus 30, 40, 60 lakhs, and sundry debtor current liability 30 lakhs. So 60 lakh minus 30 lakh, it is 30 lakh. So average working capital is 30 lakhs. And net sales it is given 150 lakhs. So 150 lakhs divided 30 lakhs, it is 5 times. That means the working capital of the sales of net sales of the company or firm is generating 5 times. That means working capital is rotating 5 times throughout the year. Then we can calculate the various ratios with the help of another problem. First, the balance sheet of ABC Limited as at 31st March 2023 are as follows. Here, equity and liabilities are given. Equity and share capital 2 years. For comparison purpose, we have taken 2 years. Balance sheet, one is 31st March 2023, second is 31st March 2022. So equity share capital 7 lakh in 23, 6 lakh in 22. Then reserve surplus 70,000 in 23 and 1,20,000 in 22. Then non-current liability, it is 2 lakh in 23, 1 lakh in 22. Then current liability, trade payables, it includes sundry debtor, Bills payable. Sundry debtor 1,20,000 in 23 and 3,60,000 in the year 31st March 2022. Bills payable is 10,000 in 31st March 23 and 20,000 in 31st March 22. Then assets. Non-current assets includes plant, property, plant and machinery, that is net tangible 6,50,000, 5,60,000. Then current assets, inventory or stock 1 lakh in 2022 it is 1,50,000. Trade receivable debtor it is 2,50,000 in 23, 4 lakh in 22. Then cash and cash equivalent, first cash in hand 80,000, 50,000, then cash at bank 20,000, 40,000. Statement of profit and loss for the year 31st March 2023 and 31st March 2022 is given. Net sales it is given 15 lakh in 31st March 2023, 10 lakh in 31st March 2022. Then cost of sales 11 lakh, then 7 lakh. So gross profit for 31st March 2023 is 4 lakh, for 22 it is 3 lakh. Then operating expenses given 2,50,000 31st March 2023. So net profit for 2023 is 1,50,000. Then gross profit in 2022 3 lakh less operating expense 2 lakh, net profit is 1 lakh. So we have to calculate the current ratio, acid test ratio, receivable turnover ratio, average collection period or debtor velocity ratio, inventory turnover ratio, working capital turnover ratio from the given problem. In this problem, so current asset is equal to or current ratio is equal to current asset by current liability. In 2022, then 2023. Here current assets is inventory 1 lakh, trade receivable 2,50,000, cash in hand 80,000, then cash at bank 20,000. So total comes to 4,50,000. In 23 it is 4,50,000. Then in 22 it is 1,50,000, 4 lakh, then 50,000, then 40,000. So inventory 1,50,000, trade receivable 4 lakh, 5,50,000, then cash in hand 50, 6 lakh, then 6,40,000. This is 6,40,000 current asset. Then current liability in 2022 it is trade payable, that is sundry debtor 3,60,000 and bills payable 20,000. So 3,80,000. And this is current liability 1 lakh, current liability 1,20,000, sundry debtor 10,000, bills payable 1,30,000. So 1,30,000. So this will give us approximately 1.68:1. And 2023 it gives 3.46:1. So current ratio for the year 31st March 2022 is 1.68:1. In 23 it is improving, that is 3.46:1. Then we will calculate acid test ratio. On acid test ratio we will take liquid assets. That means from current asset we will deduct the inventory or stock. So inventory or stock is here 1,50,000. So we will deduct 1,50,000. 1,50,000 means it is 4,90,000 divided by 3,80,000. So this is 4,90,000 by 3,80,000. This is 1.29:1. In 2023 it was 4,50,000. Then we will deduct the stock. So value of inventory stock is 1 lakh. So from 4,50,000 you will deduct 1 lakh, that is 3,50,000 divided by 1,30,000. So it comes to 2.69:1. Here also acid test ratio in 2022 it was 1.29:1. It is improving more than double in 2023 at 2.69:1. Then we will calculate the receivable turnover ratio. The receivable turnover ratio, it is, we will take into consideration the cost of sales. So cost of sales in 2022 it is 7 lakh. So 7 lakh divided by receivables, and receivables includes sundry term plus bills receivable, it is 4 lakh. So receivable is 4 lakh in 2022. So 7 lakh divided by 4 lakh, it is 7 lakh. Cost of sales is, we have to take into account the credit sale. So credit sale is not given. When credit sale is not given, we will take the entire sale of 10 lakh as credit sale, because cash sale is not given. So we will take 10 lakh divided by 4 lakh, it is 2.5 times. In 2022 it is 2.5 times. In 2023 it is 15 lakhs divided by receivable is 2,50,000. So 2,50,000 means it is 15 lakh divided by 2,50,000. 2,50,000. Then it is 6 times. So it is 6 times. So in 2022 it was 2.5 times average collection period, receivable turnover ratio was 2.5 times. In 2023 it is 6 times. So we will calculate average collection period. Average collection period will calculate the total receivables. Total receivable of 2022 was 4 lakh divided by average sales. That means sales is 10 lakh into 365 days. So number of days for collection is 144 days. So it is 144 days. In 2023 the receivables is 2,50,000 divided by sales is 15 lakh into 365. That is, here 2,50,000, here 15 lakhs. 1 by 6, that is 78 days. 73 days. That is 25, 6. Oh, that is 65, then 6. That is trade receivable is 2,50,000 divided by sale is 15 lakh. That is 1 by 6 into 365. That is 61 days. Here it was 144 days, here it is 61 days. Then we will calculate inventory turnover ratio. That is, inventory turnover ratio we will calculate, that is, we will take into account cost of sales. Cost of sales in 2022 is 7 lakh divided by average inventory. When the inventory is given, that is 1,50,000. So 1,50,000. It is coming. So inventory turnover ratio is 4.67 times. That means the inventory is converted into sales 4.6 times in a year. Then in 2023, our custom sales is 11 lakh and the inventory is 1 lakh. So it is 1 lakh. Sorry, the inventory is 1 lakh. The cost of sales, that is inventory turnover ratio. In the inventory turnover ratio, we are taking into account the cost of sales as in 11 lakh. So cost of sales is here 11 lakh divided by inventory is 1 lakh. So it is that is 11 times. Then we will calculate working capital turnover ratio. So working capital is current asset minus current liability. Current asset is here in 2022, current asset is 6,40,000. 6,40,000 minus current liability 3,80,000. So it is 2,60,000. It is 2,60,000. Then the cost of sales is 7 lakh. 7 lakh divided by 2,60,000. So it is 26 and 990. That is approximately 2.7 times. Then in 2023, current asset is 4,50,000. 4,50,000 minus current liability is 1,30,000. So it is 3,20,000. So cost of sales is 11 lakh by 3,20,000. 11 lakh by 3,20,000. 3,20,000. So 40. Then 110 by 32. This is 50 by 16. So 16, 348 and 7. 7 means 4. 3.44 times. So in 2022 it was 2.69 times. In 2023 it is 3.42 times. So in all the ratio there is development or improvement in all the ratio. Thank you for watching this video. In the next video we will discuss the profitability ratio.